Once again, good evening, everyone. This is Rashmi from Greater and today's moderator of the session. I welcome you all today to our 27th expert webinar, Parichay. And the topic for today is the most awaited, as you all know, the new labor codes, its implications on employees and employers. So, dear attendees, before we dive into the topic, let's do a little housekeeping on how the session goes. The session is divided into two parts, where the first part will be the presentation by our today's expert on the topic, which is then followed by the audience Q&A. So during Q&A, you can start putting across your questions in the Q&A option of Zoom control panel. We will be more than happy to take it up during our session and we'll try and get the answers from our expert today. Also, this session is currently being recorded and the same will be shared with all of you once the session is done for your later reference. So without any further ado, let's start our today's session. So as you may know, the government is in the process of transforming the labor law framework in India with the introduction of 4 new labor codes. And these labor codes will replace 29 current central labor laws. So in 2019 and 2020, 29 central labor laws were amalgamated, rationalized, and simplified into 4 labor codes, with the Code on Wages 2019, the Industrial Relations Code 2020, the Code on Social Security 2020, and the Occupational Safety, Health, and Working Conditions Code 2020. But what are the salient features of all the 4 codes? How will these impact both the employees and employers? So in the next 1 hour, we are going to discuss this in length with our today's expert, Mr. Amaranath Ambati, and understand the implications of the new labor codes in detail. Well, to tell you more about our expert, Mr. Amaranath Ambati, Mr. Amaranath is a CA by profession and has around 19 years of experience in the fields of NRI, HNI, taxation, US tax and labor law consulting, and he started his career in the International Executive Services Division of KPMG Global Services, where he worked on US tax returns and related compliances for expatriates. Prior to starting the firm, Amarnath worked in the Global Employer Services practice in Deloitte, Bangalore. His expertise includes various facets of global mobility like expatriate tax, social security, PF implications on international workers, ESOPs, immigration, assignment structuring, etc. He was an active member of the team which makes industry representations to Ministry of External Affairs through NESCOM in matters concerning social security legislations. In his current role, he has assisted his clients on PF matters, issues relating to international workers, gratuity trust, etc. He has also advised clients on matters relating to labor codes, impact analysis, compensation structuring, labor law compliances arising on account of merger or demerger, and many more. Once again, I welcome Mr. Amaranath Ambati to our webinar today and would like to hand over the session to you, sir.
Yeah, thank you. Thank you, Rashmi, for such a nice introduction. And good evening, everyone, and a warm welcome to all of you. So thanks for making up some time in attending the session, and hopefully I would expect that most of your questions will be clarified. Of course, labor codes is a very vast subject, and each code, I mean, we can have a day session for each of these codes, and still the time will not be enough for that. So with 1 hour, whatever is prominent, whatever the salient features and the most important aspects of the code, definitely I'll try to cover, and hope you will have a valuable session. And parallelly, I would like to thank Great HR team for giving me an opportunity to present my views on these upcoming labor codes. Okay, let us move on and start the session. Let me share my screen. Hope you're able to see my screen.
Yes,
I'm
sir.
just
Yeah.
trying to, yeah, fine. So coming to today's aspects, let's see the overview of these new codes. Of course, many of you may be thinking when this will, these codes will come into effective. So we will see. I'll try to address your question on that. So the objective of the code is to amalgamate and simplify and rationalize the provisions. So as the name itself indicates, is the code, which is a consolidation of the existing laws. So they would like to amalgamate these codes and make it simple as much as possible, and where the industry can follow this. And to facilitate ease of compliance and bring in transparency to these codes is another objective. When I say ease of compliance, just to give an example, when you look at the current existing system of labor laws, the minimum registrations required for any organization is the 8 registrations, and those 8 registrations are expected to come down to one registration, one single window registration, with the effective of these codes. So that is the ease of compliance. That's the level of transparency which the government would like to bring into. And then provide uniformity of definitions. And of course, as all of you are aware, when it comes to the very most difficult and a challenging definition which we see in the current labor law today is the wages definition. PF has its own definition, ESI has its own definition, gratuity comes in a different way. So to bring in uniformity of all these definitions, government is planning to bring in uniformity with respect to definitions in these labor codes. So coming to what is the current status of these codes, of course, presidential assent has been received. Date of enforcement is still awaited. Schemes or rules are yet to be notified. So when I say rules are yet to be notified, there is a issue here. I mean, this is taking time because labor law being a concurrent list of the constitution, both federal and state governments have right to come out with their own rules and regulations. There are certain aspects which have been delegated to the state governments where they are free to enact their own rules. So this is where the time it is taking into. What I understand with respect to today's scenario is out of 35 states and union territories, 24 states are ready with draft rules for all the 4 codes. But other rest of the states, they may be ready with 1 or 2 rules for the codes and not for all the codes. So as per the latest media reports as well, Labor Ministry has said that they're very keen to implement these codes at the earliest as soon as possible. However, they have not committed any timeline towards that. So when is it going to be effective is a $1 million question where nobody has answer to it. But in my view, definitely the labor codes are going to see its light of the day. Maybe if not today or tomorrow, definitely it is going to come with maybe some changes here and there based on the industry representations and the labor unions representations. Definitely the government is keen to implement this. So hopefully, let us hope that at least by end of this financial year, that is from April 1st, 2023 onwards, at least the codes may become effective. So coming to salient features of these codes, I have just taken some points here for you to present. That is, each code has subsumed several existing labor acts, and we are going to see those as well in the coming slides. So, new definition of wages has been introduced, which is uniform across all the 4 codes and all the 4 provisions, with certain exceptions. There are certain areas where even the definition of wages has been changed. So those are basically an exceptions, but not for many things, not as a general rule. So the many new concepts or the new definitions have been introduced, which is like gig or platform workers, fixed term employees, migrant workers. These areas or these sectors of workers has been recognized now, and there has been a statutory recognition provided to them through these labor codes. And another important aspect is the period of limitation. When you take today's labor laws like PF or ESI, there is no limitation period. Labor authorities can go as back as to the date of enactment, that is 1952 for PF. However, the new codes are putting a restriction there, and they are introducing the period of limitation of 5 years. So we are really going to, I mean, the industry is really looking forward this from a long time. And this is one of the aspects which has been addressed by the government in the new labor codes. So what are these new codes? Code on wages, code on social security, industrial relations code, and occupational safety, health and working conditions code. So let us see each of these codes one by one. Let us talk about code on social security first and then move on to other codes. So code on social security subsumes 9 existing legislations, which are basically the important ones are Provident Fund, ESI, then Maternity Benefit, then Payment of Gratuity Act and Employees Compensation Act. These are the 5 important codes which are applicable generally across the industry and getting subsumed into Social Security Code. So what are the salient features under the Social Security Code? So coming to Provident Fund, applies to all establishments where 20 or more employees are employed, which is same as today's scenario. The contributions today it is 12%, whereas the codes propose the contributions as 10% of wages for both employer and employee. So what is the impact of this? 12% is going to come down to 10%. So this may have a higher take home impact to the employee because the contribution is reduced by 2%, and especially where employer contribution is part of CTC, the impact may be higher. The take home may get take home may go up by 4% because 2% employees and 2% employers. So there is a 4% impact on basic wages when you compare to the current regime. And another important aspect is the threshold. Today we have a threshold of 15,000 rupees on Provident Fund. So the codes, when you look into the codes say that the threshold will be notified except for Provident Fund. So in a way, the codes are not intended to provide a threshold for PF. However, when the codes were rolled out, I mean, when the codes were available for public discussion, there were a lot of representation from the industry that this cannot be the case and it is going to impact the existing structure as well as the existing employer-employee ecosystem will get disturbed to a great extent with this. So it looks like government has listened to that and they have mentioned that they will look into this issue. It is going to be a serious issue. Of course, they will look into this is what they have indicated. So what I understand and my view is that through a notification, a threshold may also come to PF. However, what is the threshold, whether they're going to retain it to 15,000 or they may make it aligned with other laws like bonus and ESI where the threshold is 21,000 is a thing which we need to wait and watch till the notification comes in. So then comes the ESI, Employee State Insurance. Again, applies to all establishments where 10 or more employees are employed, which is same as today. Contributions and threshold on wages is expected to be introduced through schemes. They have not mentioned the percentage of contributions, whereas for PF, the code itself gives the 10% contribution. But whereas for ESI, the contributions are not indicated by the code anywhere, and it is expected to come through the scheme. More or less, my view is they may retain at the same like 0.75% for employee and 3.75% for employee, total 4%. However, where the impact is in the case of ESI is when you look at the current law, ESI is based on the gross wages, that is total wages. But as per the code, it is on again the definition of wages. Like there are certain exclusions which are there, and HRA is part of that exclusion. So taking an example of an employee who is drawing 25,000 as a monthly wage as on today, he is out of ESI coverage because his salary is more than the threshold of 21,000. But assuming in that 25,000 is 6,000 is HRA and 25,000 minus 6,000 comes to 19,000. As per the codes, it is 19,000 is the wages and not 25,000. So the coverage or the number of employees who comes under the ESI may go up when with the new definition of wages. Though the total wages is contracted to certain extent, like so there is a there is a contraction in the total wage amount, whereas if you see the number of employees who moves under ESI may become high. So employer contributions obviously will go up on a total basis, so it is an additional cost to the company. Employees who are currently not coming under ESI may come under ESI will have a greater impact on their take home because 0.75% of wages are going to go as their employee contribution towards ESI. So companies have to be geared up for this. And accordingly, the compensations have to be structured. How to protect that 0.75% of the employees who are newly joining this ESI scheme is another aspect which need to be looked into by companies. So the next aspect is the gratuity. Again, applies to establishments where 10 or more employees are employed. Except the definition of wages, all other provisions are more or less the same. I mean, as of today, whatever we see, that 20 lakhs cap is also may get retained, though the act does not say it may come in the scheme again. That 20 lakhs is also going to get retained is what the general view. And here, as of today, gratuity is payable only on basic salary. Whereas, as per the codes, it is based on again the wages definition. So it is not only the basic, it may even the other allowances are getting added to that wages except a few exclusions. So for the purpose of gratuity, unlike ESI, the definition of wages is widened. It is going big. So as per the new code, there will be a greater impact on gratuity. One is on the payout, the other one is on the provisioning. Just to take an example, assuming the codes will become effective from April 1st, 2023 onwards, and in the month of May, if a person resigns and who has rendered for 6 years of service, the gratuity which needs to be paid is as per the wages definition as per the codes and not on the basic salary. So there is a huge impact on gratuity, and the provisioning is going to go up, huge impact to the P&L where the management need to be aware of. And also when the payout comes in, there is a cash flow impact to the company, and it is going to go high since the payout will become more and more in the case of gratuity as compared to the existing laws. This is another area where industry has been represented to the government. They're asking, industry is asking that please provide us a grandfathering of gratuity. See, in my example, if the employee leaves in the month of May till the codes become effective, that is till April 1st or till March 31st, I will calculate the gratuity as per old law. And from April onwards, we will calculate it as per the new codes. So that there will not be a big impact and the industry will be prepared to pay out gratuity on a go forward basis at the higher amount. At least for the older period, it should be allowed to be paid on the as per the earlier provisions. However, the government has not said anything. They have considered this as a serious issue, but they have not commented on it. So we have to wait and watch whether the grandfathering of the earlier provisions will be allowed or not in the case of gratuity. Then comes maternity benefit. Maternity benefit, more or less the existing provisions, mostly it is the same. So 26 weeks of paid leave is allowed. Again, as of today, it is a total wages which needs to be paid. But as per the code, if you see the maternity benefit, the wages need to be paid for during that maternity leave period is wages. So there will be a lower cost to the companies because when you look at the total salary and wages, since there are certain exclusions, there will be some savings to the company in the case of maternity wages payout during the maternity leave period. And 26 weeks of paid leave, which is there in today's law, is same thing is getting into new codes as well. So there is not of a much change expected in the maternity benefit. Then comes very interesting topic of the day, which is definition of wages. Definition of wages, of course, it is uniform. We have already discussed along with the codes with few exceptions. So basically, it includes all remuneration, whether it is paid in the way of salaries, allowances, or perquisites, whatever you call it as a gift or a present or a bonus or profits in lieu of salary, whatever you pay to the employee during the course of employment is wages. However, there are certain specific inclusions and exclusions. So wages is basically all remuneration minus specified exclusions. And again, there is a inclusion which says that if the exclusions are exceeding 50% of the total wages, the excess over and above that 50% need to be ignored, in the sense that need to be added back as wages and cannot be considered as exclusions. And then what about the benefits in kind? Yes, up to 15% of total wages, whatever benefits are provided in kind are deemed to be forming part of wages. So just to summarize, wages is all remuneration minus specified exclusions. And if those exclusions are over and above 50%, that excess of 50% need to be added, which is conditional inclusions. I am calling it as conditional inclusions plus the benefits in kind to the extent of 15% of total wages. So this is the wages definition, and more or less this applies across all the codes. So then let us understand in detail as to what are these exclusions and what are these inclusions. So specified exclusion, bonus payable under any law which does not form part of the remuneration payable under the terms of the employment contract. There are two important aspects here which one need to understand. One is bonus payable under any law. That means it should be a statutory obligation for the employer. So example is the bonus payable under Bonus Act is one of the exclusions, provided it does not form part of the remuneration payable under the terms of employment contract. What does it mean? That means if it is a statutory bonus and if you are making it as a part of CTC, then it is not an exclusion, because once it becomes a part of CTC, then it is a part of remuneration payable under the employment contract. So your offer letter is the employment contract which includes that bonus as a part of remuneration. So that is not excluded item, though it is paid under the Bonus Act. So two conditions to be satisfied for bonus to be excluded. One, there has to be a statutory obligation. Then it should not form part of the remuneration payable under the employment contract. Then comes the value of house accommodation under a government order. Generally, private sectors it is not applicable. Then employer contribution to PF or pension fund, which could be NPS as well. Then interest accrued thereon is also not wages, excluded item. Then conveyance allowance or any traveling concession. Traveling concession is nothing but the leave travel allowance. If you are giving, then that is also excluded. Then amount paid to defray special expenses, I will come back to this. Then house rent allowance, then amount payable under any court order, overtime allowance, commission, gratuity, and retrenchment compensation are the exclusions. So explanation again says that from A to I, that is from bonus to commission, once you total all these exclusions, if that exceeds 50%, then the excess of such 50% need to be added as wages. So your exclusions are capped at 50%. And when I say exclusions, it's only A to I. Gratuity and retrenchment compensation should not form part of that 50% wages. Okay. Then comes the benefits in kind to the extent of 15% of total wages need to be included. So if benefit is provided in kind, say private sector is provided a house accommodation to the employee. So under government order, if it is provided, it is excluded, but not for a private sector employee. So how will you value that? What value you will adopt? There's no clarity there. Can I adopt, in the absence of clarity, income tax valuation? Answer is doubtful. I mean, may not sail through. In my view, where there is no clarity with respect to valuation mechanism, you should go with the cost to the employer in arriving at the value of the benefit in kind. So whatever the value to the employer, I would say please consider that as a value of your benefit, and then to the extent of 15% of wages, you add it back. So now coming back to the very interesting topic in exclusions is the amount paid to defray special expenses. So what exactly special expenses mean here? The codes have not defined special expenses. Code or the existing draft rules or even the state rules, when you look into special expenses, are not defined. So in the absence of definition, what can I look into is the judicial precedents, which is the court enacted decisions or the case study, case laws, what we call as. So what case laws you can see, because the code itself is a new code. There is no judicial precedence for the code because it is coming as a fresh code. So there is no judicial precedence available. So what is the next available aid to me in with respect to this interpretation, understanding the meaning of this special expenses? We can look into the existing laws which are getting subsumed into the code and see whether this special expenses have been defined in any of those codes. Looking at ESI Act, yes, definitely ESI Act comes in our aid, and ESI Act specifically excludes from wages, existing ESI Act, any amount paid to defray special expenses. However, ESI Act also does not define what is this item, what is meant by special expenses. So what is the next aid, next parameter available for us is the court decisions under the existing laws which are getting subsumed in the code. That is, any case laws available on ESI Act, which specifically deals with the special expenses. Yes, there are court rulings, and these courts have held that these are the expenses which are paid to carry out, I mean, during the course of the employment, any duties carried on by the employee during the course of the employment, and which are necessary to execute the work assigned to him. So again, there are two things, essential things. One, this should have been paid during the course of the employment, and then another thing is necessity. It should be necessary for the person to execute the work assigned to him. And a classic example for these is the uniform allowance. Uniform allowance, or a washing allowance, I would say, to keep the uniform tidy, is what the courts have held that in one of the cases, like Karnataka High Court only has said that the washing allowance is definitely an amount paid to defray special expenses and hence should not form part of wages. So when you are applying this clause and excluding any item from your wages, you need to be very careful, and it has to be taken, a very conscious call has to be taken after analyzing the pros and cons, and also the nature of benefit given to the employer, or the nature of expenses which is being provided for to the employee. So let us understand this definition of wages in more detail through a case study. This is a simulation which I made just at a high level to give you a feeling on how the wages are going to impact, how the definition of wages is going to impact on various benefits. See, I have taken a CTC of 20 lakhs. Variable pay is 4 lakhs. That is another thing, that there is no clarity as to whether bonus can be excluded from wages. I mean, apart from statutory bonus, or you may call it as a variable pay or an incentive, whether or ESOPs, for example, or RSUs, those benefits can be excluded from the definition of wages. No clarity. Again, lot of industry representations, government is yet to provide or yet to come out with their views on that. So these are all clarifications are expected through notifications once the course becomes effective. And for the time being, for this simulation purpose, I have excluded variable pay. I'm assuming that the government is going to come out and clarify that the variable pay is an excluded item. Then basic I have taken at 40%, HRA 40% of basic, generally what we see in the industry. Then LTC, that is LTA, leave travel allowance, as 2 months of basic. Then PF contribution at 12%, and then telephone, meal vouchers, gratuity, and special allowance. Total CTC is 20 lakhs. And I have applied the same structure as per the new codes to arrive at the implications on various benefits. As per new codes, what is going to change? 10% of basic as I have taken as PF. Assuming again there will be a threshold of 15,000 or 21,000. So 76,800 has become 64,000, and the balance is getting adjusted in special allowance, and the same impact on gratuity as well. So wages for the purpose of gratuity, and I'm assuming that the employee has completed 7 years here. So wages for the purpose of gratuity, when you look at the existing laws, it's only on basic, which is 6,40,000, and the monthly wages comes to 53,333. Your gratuity payout for a person who has completed 7 years of service is 2,15,385 rupees. Look at the new code. Wages, after considering inclusions and exclusions, what we discussed right now, the new wage definition, applying the new wage definition, the amount comes to 10,96,587 for gratuity. Wages per month is 91,000, and gratuity payout is 3,69,000, which is almost 40% more than the current. Which is almost double, which is 80% more than your current payout. And similar maternity benefits, you can see, which is there is a reduction in the benefit. And leave encashment again, which has been going up. And PF, assuming there will be a threshold, it comes down. If there is no threshold for PF, 76,000 is going to become 1,14,000. So this is the impact. And there is some understanding which is prevailing in the market that once I make basic as 50%, I am done. There is no need to look into any further things. That's not the correct view. So you have to look into the structure and see, I mean, by making 50% as your basic, you are increasing the liability, gratuity liability, because basic is one of the included item for wage purposes. And you are moving some amount from special allowance to basic. That's all you are doing. So you are retaining your special allowance, which is also an included item for wage definition purposes. So by making 50%, definitely there could be some benefit in some cases, but not in all cases. So my advice is please carry out the impact analysis in detail at all levels of your organization and for each and every employee to understand the impact on gratuity, especially because your provisions are going to be doubled in most of the cases, especially where people have worked for 10 years, 15 years, the provision is going to be double for them. And the management should be aware of this. And once the course becomes effective, there will be a huge hit to their P&L because of this. So what are the mitigation strategies when it comes to impact analysis, like the compensation or definition of wages, comp restructuring? You can see to what extent you can increase the excluded items in the comp structure to mitigate the gratuity outflow, and similarly for the leave encashment. So how to tweak the comp structure? Definitely it is not going to be at par with the existing levels, but you can bring in some efficiencies there by restructuring your wages. So any bar and comp structuring, at this point in time, labor codes does not talk about this. But when you look at the PF Act as of now, restructuring with an intention to reduce the PF wages is an offense. So we don't know once the codes becomes effective, what is going to be the code say. They may bring in that provision even in the new codes. So it is right time to look into this and keep the things ready so that once the course becomes effective, immediately you can roll it on. And I mean, otherwise, many companies have looked and they have made the changes in their comp structure now itself, so that it is way ahead of the course becoming effective. Then administrative hassles, definitely, I mean, what kind of changes you need to bring into the comp structure and your softwares and payroll softwares. You may need to inform payroll vendors with respect to this. All these are administrative hassles. Another thing is the employee communication. This being a sensitive issue, you need to be very careful while addressing this issue to the employees. So that is another area where the companies have to focus on. So yeah, now we have come to the polling question. So I think Sharmishta can roll out the poll. I mean, the question is here. So Sharmishta, can you roll out the poll? Yeah. So have you carried out an impact analysis of the change definition of wages for your organization? Yes, no, in process, or do not think it is required. Please choose the answer as per your organization's status and then submit the poll. So before the poll results comes, I mean, I think I'm giving value add to your time as well. So hope, I mean, I'm explaining wherever it is feasible and touching on those aspects and educating you on those. So it is a right time to carry out the impact analysis, especially where the number of employees are more than 100. In my view, you have to be geared up for the codes and see to what extent you can tweak the structure and also intimate to the management, especially when stakeholders are abroad. They will not be knowing about these changes. So it's the right time for you to showcase the impact and then give an alert to the leadership. Yeah. Then can we see the results, Sharmishta? Okay, yes, 23 out of 259%, no 56%, in process 31, and do not think it is required 4%. See, do not think it is required. Yeah, of course, it's a very minimal response. People have responded, but there also I would like to check with you whether you have to see whether why this is not required, because you may be under the impression that only if it is more than 10 or 20 the labor codes applicable. No, that those are for the specific acts, I mean specific schemes to apply gratuity or PF, but the labor codes as such is applicable for all establishments. So though the gratuity may not be applicable, PF may not be applicable, but there could be other implications which you may have to look into. Then yes, it is only 9%. So there is a lot of work to be done by many of you. So please look through this and then decide on the way forward as to how you want to take this forward. I think this is a right time to carry out this exercise. Next comes the code on wages. So we have, okay, 20 minutes time. Okay, I need to cover 3 more codes, but those are not as big as code on social security. So we will try to cover all these 3 codes now. So code on wages, four legislations are getting subsumed. The Payment of Wages Act, which is to ensure timely payment of wages without any undue deductions, is the main objective of that code. Then the Minimum Wages Act, to enable fixing of minimum rates on wages. The Payment of Bonus Act, to give a statutory bonus to the employees based on the profits of the company, or it could be based on the production incentive. Then the Equal Remuneration Act, to prevent gender discrimination in employment matters. So let us understand one by one and let us touch upon all of these codes. The code on wages, the Minimum Wages Act, let's see applicability. It applies to all employments, and concept of scheduled employment has been removed in the new codes. So this applies across the industry, including service sector, whether it's manufacturing, factory, normal trading business. For all establishment, this is applicable. Then wages definition, as discussed earlier, holds good, and as per the existing laws, it includes HRA, but whereas the codes say that HRA is an excluded item. So rest day are a normal working hours, 1 day rest for 7 days working for a period of 7 days, that is 6 days work and 1 day leave rest is mandatory. And draft rules also indicate that 8 hours of work plus aggregate rest period of 1 hour. So it is an aggregate rest period. Maybe you can split this rest period into half an hour and 15 minutes breaks, or whatever the way you want, but the aggregate rest period should be at least for 1 hour. And criteria for determining minimum wages is the skill sets, geography, or both, and the working environment. Currently, it is employment wise, but there are many more factors getting into in determining the minimum wages in the new codes. So concept of floor wages has been introduced. This is another significant amendment brought under the code itself. That is, it has got more power now, more teeth to it by bringing in the act itself. So central government to fix the floor wage, and the whatever the minimum wages fixed by the states cannot be less than the floor wage fixed by the central government. So states are free to fix the minimum wages above the floor wage, but not below the floor wages. So payment of wages, this is one of the important codes which everyone to be aware of. Applicability, this applies to all establishments as per the new codes. But when you look at the current Payment of Wages Act, it applies only to industries and factories. That too only if the wages are less than 24,000, then payment of wages comes into picture currently. Otherwise it won't come into picture. But as per the new codes, there is no such criteria, no threshold, no classification with respect to establishments or factories. Applies to all across all the industries, including service sector. So wages, what is the wage definition for the purpose of payment of wages? There is an exception. There is a change here. The earlier definition holds good, except the exclusions what we discussed, like conveyance, traveling concession, HRA, all these will get added as wages for the purpose of payment of wages. So when you see why this distinction has been brought out is the regular payments what you make every month, they want to consider as wages for the purpose of payment of wages as well. So this exception has been brought in. Then timelines for payment of wages for a daily worker, a daily wage period. If you're paying it on a daily basis, then at the end of the shift, then weekly wage period, last working day of the week, fortnightly, second day after the expiry of fortnight, and monthly wage period, the maximum time period allowed is by 7th day of the succeeding month. The payment cannot go beyond 7 days. So wage period cannot exceed a month. So here the practical challenge which I foresee is in the case of new joiners. So every organization has a cutoff for payroll, like you may close your payroll on 20th or 25th or 26th. And if a person joins after that date, either you will push the payroll to the next month, or you may settle it separately. But when you are pushing this settlement or payment of wages to the next month, the wage period is exceeding 1 month. So what are the checks and precautions you are going to bring in to ensure that there is no violation of law there? So either you have to extend the new joinees, or you may have to run the duplicate payroll another time for new joinees alone on the last working day of the month, or you may have to settle it to them then and there. I mean, very difficult thing. So you have to look into changing your processes and the systems and processes as well with respect to new joiners. Then another important aspect is the full and final settlement. The code says that the timeline for full and final settlement when the employee exits is only 2 working days. Within 2 working days, the company has to ensure that full and final settlement has been done to the employee. This is also very difficult, not easy, where the industry is not geared up for. So not such defined timelines in the current act, but the new codes are looks like little stringent with respect to these things. With respect to 2 working days, what I understand is many big companies have started doing this on a pilot basis to see how it works. At least now there is a time for them to explore the alternatives available and to change their systems. So I think even I understand that it's the right time to implement these things, at least on a pilot basis, to see where the company stands, organization stands with respect to these. Then payment of bonus, it is more or less the same thing. So you can just go through this slide whenever you have time. This is not of a, there are no much changes. So I want to skip this slide for the time being. Yeah, then comes the equal remuneration chapter in the code on wages. So this again applies to all establishment. There's no distinction between factories or any other establishment. All organizations are covered. Prohibits gender discrimination on recruitment, payment of wages, working conditions, etc. Prohibition is not applicable if the employment of women is actually prohibited by any law. Taking an example of a mining industry, there are certain mining or certain places where the law itself prohibits employing women and children. And another area is the quarries. Quarries also, like, there is a restriction. So if there is a restriction from the law itself, then it's not a violation. So reference changed from male or female to gender here. So wider definition now covers all remuneration for equal remuneration. Then conveyance, what we saw is the what we saw in the earlier slide as an any overtime allowance included as subjected to threshold. Similar to the other definition what we discussed for minimum, that is Payment of Wages Act, the same definition has been adopted here. So one another practical aspect which you really need to look into is, see, when the appraisal system has completed and the promotions or the increments are announced, and there is a disgruntled employee who is a woman, may go and complain to the labor authorities saying that since she is not promoted or where the increment is not as expected to her, she may say that there is a gender discrimination because my peer who is a guy, he is getting more, he got more increment than me. So in that scenario, how are you going to defend that issue in the organization's favor? See, here my suggestion is the one is the appraisal system should be robust. You should bring in objective parameters in appraisal system rather than subjective parameters. Another area is the documentation. Have some discussions, I mean, minutes of the discussions when you are discussing with the employees, especially whose performance is not up to the mark, and document those, send those minutes of the meeting to the employee as well. So with all this strong documentation, you may defend your case. Especially MSME sector, what I have observed is the documentation will not be much robust in the case of appraisals. So now it is time to rethink on those processes and put robust systems in place where there is no room for the employee to question the entire appraisal system. Then comes deductions from wages. So following are the deductions permissible under the code on wages is the fines imposed by employer, deductions for absence from duty, deductions towards rent-free accommodation provided by employer. Most of the deductions are covered. Like the two important deductions which are covered under deductions is the recovery of advance, any kind of advance. So you are giving a salary advance and you are deducting that in the through the payroll, that forms part of deduction from wages. Then recovery towards loans and interest also forms part of deduction. So what is the big deal? So what if forms part of deduction? The thing is that there is a cap on deduction. So your deductions compared to your wages cannot exceed 50% of the wages for a particular month. If it exceeds 50%, you need to cap it at 50%. So the law wants to ensure that the employee's take home is at least 50% of his total wages. Even income tax is one of the statutory levy. Income tax or any other statutory levy is also part of the deduction. So what happens if it is more than 50%? Law says that you need to carry over the deduction and ensure that that is deducted in subsequent months. But if you're deducting in subsequent months, also for subsequent months, again, it cannot exceed 50%. So recovery of advances and loans given to employees may pose a major challenge here. So companies have to rethink on those advance policies and loans to the employees policies to ensure that they are statutorily compliant. Overtime wages, another significant impact. Court says that the overtime wages are applicable to all employees whose minimum wages have been fixed by the government. That's all it says. It does not say that the standing orders or factories or workers, nothing. So again, this is applicable across the industry, and the overtime wages have to be paid twice the normal rate of wages. Big impact to the industry, especially white collar jobs, software industry, ITES sector. How are they going to address this situation? Since the applicability of minimum wages is applicability of overtime wages is linked to minimum wages employees, where where minimum wages are prescribed. And when you look at the minimum wages codes chapter, it says it needs to be prescribed across the all kinds of workers. So we really need to wait and watch for what sectors the minimum wages will be prescribed, and whether overtime is applicable to white collar jobs or software industry, and then take a conscious call to address this change. Yeah, then comes the OHS code, Occupational Safety, Health and Working Conditions Code. There are 13 legislations which are getting subsumed into this code, OHS code. And one of the major act is the Factories Act, which is getting subsumed under OHS code. See, what are the important aspects which are going to impact the industry, especially MSME or IT sector, is leave encashment. Here, the law bifurcates between a worker and an employee. So there are two different conditions, two different definitions are given to a worker and employee. Who is a worker? And this leave encashment provisions are applicable only to workers and not employees. So worker means a person employed in any industry, to any manual, clerical, skilled, unskilled, whatever kind of labor it is, the industry is into. Any person employed in that industry is a worker, but that does not include any person in a supervisory capacity drawing wages in excess of 18,000 per month. So two conditions need to be satisfied to come out of the definition of the worker. One is he should be in a supervisory capacity, then the wages should be more than 18,000. So at least the entry level people who are not in the quality check roles or in a supervisory capacity, all are going to be considered as workers. So what is the industry meaning? Industry includes services as well. So even in IT or ITES organizations are going to be covered under this thing, but they have to bifurcate out of their employees who qualify as workers and who does not qualify as worker, because there are certain aspects of OHS codes which are applicable only to a worker but does not apply to an employee, and leave encashment is one major part of it. And what are the other provisions with respect to leave encashment? Provides for carryover of unused leaves up to 30 days. Leaves in excess of 30 days has to be encashed. And currently, I see that many companies have a policy to pay leave encashment only at the time of exit, but that's not going to be the case. The law does not say that. So as the leaves exceed 30 days, that has to be encashed even though the person is in the company and he is currently employed. And leave balance at the time of termination or resignation can also be encashed up to 30 days. So again, there is a conflict we see here with respect to state legislation, which is a Shops and Establishment Act. Taking an example of Karnataka Shops and Establishments Act, it gives the leave encashment period as 45 days, whereas the code says 30 days. There is a conflict between these two enacts. So which one is going to prevail? Hopefully the government should clarify this as well. In the absence of clarification, when there is a conflict between state legislation and a central legislation is going to prevail over the state legislation. So the labor codes are going to prevail over the Shops and Establishments Act if there is no clarity here. So certain other provisions or duties of the employer are maintaining a safe working environment is a primary duty of the employer. And another aspect is the annual health checkup for workers has to be provided at free of cost. Of course, not to all employees. They have mentioned that the nature of work and the employees will be prescribed for this purpose. At least if the employee is falling into that prescribed criteria, then annual health checkup has to be provided by the employer at free of cost. So what are the duties of employees? To report unsafe and unhealthy situation to the labor inspector or to a labor commissioner. And employment of women before 6 a.m. and after 7 p.m. can be done only with the consent of women employees, subject to safety conditions again, which are yet to be notified. So employer has to take care of, has to ensure that the safety conditions have been met, and then he can employ women employees, apart from these working hours, provided he has those their consent to work. Then comes the IR code, which is Industrial Relations Code. Three acts are getting subsumed here: the Industrial Disputes Act, Industrial Employment Standing Orders Act, and the Trade Unions Act. One important aspect which I just wanted to touch upon is retrenchment and layoff. So current provisions are very stringent. Of course, those are not applicable to service sector. Generally, service sector is excluded from the Standing Orders Act, so they are completely out of it. But the code does not differentiate between any organization with respect to retrenchment and layoff provisions. However, they have made it little more easier to the smaller industries where there are less than 300 workers. So again, here, these provisions are applicable only to a worker and not to an employee. So worker definition we have seen, and industry definition also we have seen. The same thing is going to carry over here as well. So what are the conditions? Employer shall contribute 15 days of wages, lost on wages, to a fund called Worker Reskilling Fund. This is an additional cost to the employer if you want to lay off a person. If an establishment is a factory or employing more than 300 workers, then the employer has to make a separate application to the labor department and seek their permission before layoff. Other conditions, the following conditions are applicable only if the worker has completed 1 year of service. He should be given 1 month's notice in writing, or he should be compensated for 1 month's salary before termination. Then compensation of 15 days of wages for every completed year of service or part thereof in excess of 6 months, similar to gratuity. Apart from this, is not in lieu of gratuity. This is in addition to gratuity. This 15 days wages for every completed year of service has to be provided, and notice has to be given to the appropriate authority. See, if it is more than 300 and if it is a factory, the permission need to be obtained. But whereas in other cases, it is just an intimation to the labor authority that you are laying off these many employees. And if a worker is an Indian citizen, is the one who is laid off, generally the last person employed in that category need to be retrenched first. So the new entrant is the one who has to be laid off unless there is an agreement to the contrary. So last in first out method need to be followed in the case of retrenchment. So what is the way forward for the organizations now? Yes, definitely the compensation structure. With new definition for wages, it is high time that you look into the impact of the new definition of wages on your benefits and see to what extent you can bring in the efficiencies in the structure, and also look into reducing the outflow of expenses to the organization, and finalize the positions to be adopted. Like we saw rephrase special expenses, you may have certain components where you might be thinking that this qualifies as special expense, but it may not be. So you need to look into and analyze the component, for what purpose it is being given, look at the judicial precedents and take a conscious call there. Then policies and processes, provisions relating to normal work day, rest day, what we discussed, overtime wages, leave encashment policies, those have to be looked into. Then coming to ERP system changes, categorization of workforce, because leave encashment example, leave encashment is applies only to a worker and not to an employee. So each and every employee in the organization, you have to categorize whether he is a worker or employee. There are certain provisions of the codes where it applies only to workers and not to employees. Then new formats for wage register and pay slips. The courts have prescribed the format of pay slips, and it is mandatory to issue the offer letter to the employees. So those need to be documented as well. So what kind of ERP changes you want to, ERP system changes you want to bring in the organization, it is time to look into those as well. And another important aspect is the full and final settlement within 2 days. I don't think any of the organization, especially MSME, is in a position to do this as of today. But of course, considering the number of employees and also the organization setup, it may not be difficult for you to implement this. So it is better you look into this and start working towards these things from now itself. Then review of contracts. As per the new codes, it is the obligation of the principal employer with respect to any default by the contractor with respect to contract workers. So it is high time that you review the contractor's salary structure to ensure that he is compliant. If there is a non-compliance and if he is defaulted, then it is the obligation of the principal employer to make up that loss, make good that loss to the employee. And then another aspect is the fixed term employment contracts. The law has recognized fixed term employment contracts. If you are in need of a manpower for a specific duration, maybe a project may go for 3 months or 6 months, you can hire an employee for a specific duration, and accordingly you can issue the offer letter, and post that duration you can say goodbye to employee. It's very easy process. So that has been recognized. So if you are hiring those kind of employees, what kind of changes you want to bring into your system is another focus area which need to be painted. So this is the last polling question what we have. Sharmista, can you run the poll? So what would be the key area of focus of your company basis the discussions what we just concluded? Is it a review of salary structure and impact analysis, or review of compliances and timelines, or review of policies and processes, or all of the above? Let's see the poll results. It's already 5, so let us wait for a moment and then see the poll results, and then we'll move on to the questions. I don't want to disappoint the audience without taking any questions. Definitely we will try to address the questions as much as possible, considering the time factor as well. You can run the results, Sharmista. Okay, 12%. But in my view, all of those are important for any kind of organization. So 79% have answered it as all of the above. So it is definitely all these aspects need to be looked into in an organization. So, I mean, I think we have come to the end of the presentation. So whatever questions you have, I'm happy to take that. And these are my credentials where you can reach out to me. So Rashmi, can we move on to the questions?
Sure, Mr. Amaranath. First of all, I would like to thank you for such an insightful and knowledgeable session. I'm certain that our audience has gathered a lot more information and details on this basic topic. So, dear attendees, I would now request the audience to put down their questions if you have any. And Mr. Amarnath, yes, of course, our attendees definitely have the questions. I can already see a big line of questions here. So let me start with it one by one. So one of our attendees have a question that is, has this new labor code implemented?
So we have addressed this question already, so that this is not yet implemented. This is in the process to be implemented. So it is yet to be notified, and government, both central and state governments are in the process of implementing this at the earliest.
Sure. So I hope that answers the question. And also, Mr. Amarnath, I think this is also a repeat question, but again, it would be of great help if you could clarify it again. So the question is, what is new basic applicability as per new minimum wages?
See, as we have already seen, the codes are not yet implemented. It is yet to be effective, and the existing codes have not prescribed any minimum wages. Those need to be notified through a separate notification once the codes becomes effective. So we have to wait for the notification to be effective to understand what is the new minimum wages prescribed as per the new codes.
Sure. Thanks for the clarification. And the next question is about ESI basic and entire gross. So how this works. So the question is, once these become law, whether ESIC will also be deducted on basic only or still continues to be on entire gross.
Yeah, it is neither basic nor the entire gross. You have to go with the specific definition what is given for wages. As we have already seen, there are specific exclusions in the which has been prescribed. So exclude those if it is any component is there in your structure, and then you arrive at the wages for the purpose of ESI, and then on that wages you have to contribute ESI.
Sure. All right. So the next question is, what is the new definition of wages? Like, what are the components included in wages?
So we had a lengthy discussion on this. I think this would have been clarified to him.
Yes, sure. So I'll move on to the next question. Is production include specified exclusion, and what will happen if the same if it is above 50% of wages?
Production includes specified exclusion. No, sorry, I did not get this question because production includes specified exclusion. And what will happen if the same is above 50% of wages? What is production? I don't know. Maybe there will be some typo,
Yes,
I feel. Maybe we
right,
can
right.
clarify this
Yes,
separately.
sure.
Yeah.
So Ajay, actually,
Okay, okay. Yeah, I think she has again typed in production incentive includes specified exclusion, and what will happen of these if the same is above 50% of wages. Yes, see, production incentive generally, I mean, it is not driven by a statute. It is not prescribed under any statute. However, if you are paying it as part of the production incentive as part of the bonus act, then definitely it is a prescribed statutory bonus. So you have to exclude it, and if that exceeds 50% of wages, the excess of 50% has to be included as wages.
sure. I think that clarifies here. So the next question is about ESOP, Mr. Amarnath, ESOP and Carly's. So the question is, does ESOP and Carly's is included in benefits of this time?
Currently, as I mentioned, there is no clarity here. So ESOP definitely there is no clarity in my view that should be excluded, because though I understand that there is a perquisite as per the Income Tax Act, but to consider that as a benefit in kind and also to include as wages, there will be a huge outflow and there is a huge impact on the employers. It is basically a discourage to the industry to provide ESOP. So I hope that government will come and clarify it, saying that this is excluded. But as of now, if you see, there is no clarity here. And I mean, technically, if you see, that has to be included because that's also a remuneration paid to the employee. And coming to car lease, I think in my view, it is definitely a benefit in kind, because you are giving a car perquisite to the employee. Though it is a leasing arrangement which you have come out with, it is basically employer is providing car to the employee, and that is a benefit in kind.
Sure. So the next question is very interesting, Mr. Amarnath. It is, are these wage code effective this financial year?
Are these wage code effective this financial year? I mean, as I already said, there is no answer to this. I mean, they may make it effective. One hope was that it may become effective from October 1st, but looking at the current situation, in my view, it may not come into effective from October 1st. So I think in this financial year, these labor codes coming into effect is doubtful.
All right. So I'll move on to the next question. So the next question is about PF and its cap, Mr. Amarnath. So the
Yeah.
question is, if PF currently is without capped on basic and BA, that is 12%, whether it will be 10% on total wages?
The percentage of contribution is 10%, but whether it is on total wages or whether it is on, definitely not on total wages, either it will be on wages, or if they provide the threshold, I mean, then it is left to you to contribute only on basic if the basic and DA is more than the threshold. So at this point in time, definitely it is on 10%, but on what portion is what we really need to wait and watch.
Sure. So I'll move on to our next question.
Yeah.
So one of our attendees says, that he or she has seen that the basic is changed to 50%. Is that true? If true, then its impact will it impact the PF and NPS whose contribution is 12%?
Yeah, as I pointed out, that's a misunderstanding which is prevailing in the industry that basic has to be 50%, or if I make basic as 50%, then I am fine. See, the code does not define what should be your basic percentage. You are free to give whatever percentage you want for your basic. But the total wages is defined and you have to go with the wages for the contribution purposes. So whether it is, I mean, and NPS is not part of the codes at all. It stands out as a separate legislation. So NPS contribution, you go with the normal general practice, what is prevailing today, even in when the labor codes becomes effective. But for PF, definitely it should be on wages. If there is a cap, of course, you can restrict it to the threshold which is prescribed, or otherwise it will be on the wages.
Sure, I think that helps a lot. So, Mr. Amaranath, next question. So, one of our attendees says that we have planned the CTC restructuring. Our existing PF is on the 12% gross, HRA that's more than 15,000, and now we are in the process of making the change in PF wage ceiling to 15,000. So, is it advisable or any likely changes may come soon on the PF wage ceiling? We are collecting willingness from employees to apply this change.
See, I think this question is more towards the existing laws rather than the labor codes. So they want to know whether the existing PF ceiling of 15,000 is going to be retained or it will get increased to 21,000 or whatever. See, what I understand is based on the media reports, as per the latest Board of Trustees meeting, I mean, they are going to discuss this issue because the panel has proposed to increase this to 21,000 and to make it at par with the ESI thing, but it is not yet approved by the Board of Trustees. So we have to wait and watch till the Board of Trustees comes out with a clarification on this. But there is a proposal. Yes, there is a proposal to increase it to 21,000 even before the codes getting implemented.
Sure. So the next question is related to leaves. So sick leave and privilege leave, is it a mandatory leave to be provided from employers?
See, this you need to go with the, I mean, I'm not sure which state this question related, this organization is based out of. So you have to go with the existing Shops and Establishments Act, and Shops and Establishments Act is the one which prescribes the leave criteria for that particular state. So, I mean, please go through your Shops and Establishments Act and see whether the sick leave is mandatory. I would say that for Karnataka, sick leave is not mandatory. The code does not, I mean, the Shops and Establishments Act says the total leave should be this much. But when you look into the Telangana Shops and Establishments Act, there is a specific mention for sick leave as well. So it is a particular state subject. So I advise you to go through the Shops and Establishments Act, but pertaining to your particular state.
Sure. And next question is on compensatory off, that's comp off. So the question is, can comp off be availed in the next week itself? Is it mentioned under any act?
To my knowledge, no, there is no mention that it has to be availed within a week or so in any of the acts. And to my knowledge, I don't think it has been prescribed in any of the acts.
Sure. And also, Mr. Amaranath, I think you have already touched upon the next question, but I think our attendee seeks a bit elaborative answer on this. So you may choose not to answer as well here since it's a repetitive. Anyways, I'll just read out the question. So the question is, in the monthly wage scenario, if someone is leaving in the mid of the month, like example on 15th, and the payroll will be processed by end of the month, how to process the FNF in 2 days?
This is exactly the issue which you need to address. As I already mentioned, there are some companies who are doing the full and final settlement within 2 days, which means to say that they do the full and final settlement 2 days once for the people who have left. That means they run the payroll only for those employees and they are implementing this. The regular payroll will be run by whatever dates you have, as per the policy, whatever the dates you have indicated in the policy. But for exits, employee exits, they are implementing that full and final settlements will be done in 2 days. So basically, you have to run the payroll only for those employees and settle the amount.
Sure. And the next question is the ESPP contribution for IT industry an allowed deduction?
ESPP contribution, no. Any recovery by the employer towards the stock option plans, like employee stock purchase plan is ESPP. So any deduction is that is not a prescribed deduction at all.
All right. So the next question is about leave encashment. So leave encashment in Karnataka is increased to 45 days. So does this apply in new labor law?
Yeah, we have already touched upon this. I mentioned that there is a contradiction between conflict between the federal and the central and the state legislation, because the new labor code says 30 days and the Karnataka Shops and Establishments Act says 45 days. So I think there will be a clarification for this as well from the central government itself, is I'm hoping for. But if there is no clarity here, then the federal law prevails over the state legislation. And also keep in mind that as per the labor codes, 30 days that leave encashment provisions applies only to workers and not to employees. So if you have to categorize your workforce between workers and employees, and then follow the rules accordingly.
Sure. So the next question is it true that gratuity would be payable even after one completed year of service in the new code?
No. See, 1 year of service comes into picture for a fixed term employee. We discussed that the fixed term employee, you are hiring that employee only for a specific period. In case of fixed term employees, if they have provided their services, if you have employed that fixed term employee for more than 1 year, they will be eligible for gratuity. But otherwise, for the regular employees who are on your payroll, the existing provisions of 5 years continues as is. There's no change there.
Okay. So the next question is about freelance workers. So the question is, will the new codes impact freelancers working?
Freelancers working. See, the even new codes have not recognized the freelance worker as an employee. Okay, freelance worker is a consultant basically. So I mean, if I understand many companies are hiring people on a consultant basis or as a contract workers, and they are taking their services. That is one of the high risk area which definitely we need to look into on what terms the employees have been employed and what is their role in the company, and what benefits have been provided to them, and how compliant the company is with respect to consultants. So yeah, that area needs to be looked into by the company. But
All right.
definitely there is no recognition as a freelancer in the codes.
Okay. So the next question is whether performance bonus is included in the exclusion of wages.
Yeah, this also, as we already discussed, the performance bonus is not an excluded item as of now. Only statutory bonus is excluded. But there is an industry representation, and there is a government has mentioned that they will look into it. I mean, as I mentioned, they have taken it seriously. They understand that this is a serious issue, so they have mentioned that they have to look into it. Hopefully, I mean, this may get excluded. It has to get excluded in my view.
All right. So the next question is, can worker and employee category also fall under IT software industry, especially people working as developers, testers with the help of computers category?
Yes, the concept of worker and employees is applies to even to software industry. As I mentioned, who is not a worker is the one which you need to look into. There are two conditions to be satisfied in order not to consider him as a worker. One is he should be in a supervisory capacity and drawing wages in excess of 18,000 per month. So it is the duty of the company or the employer to define the roles and responsibilities of the employee and see whether he is in a supervisory capacity or not. So if he is in a supervisory capacity and he is earning more than 18,000, he is not a worker. Otherwise, that person comes as a worker. It doesn't matter, or the designation of the employee is not relevant. You may call it as a tester or a developer, but if he is not in the supervisory role, then he is a worker.
All right. And next one is a very important question, I guess. So the question is, what is the best source to keep a track of these codes and changes?
I mean, it is basically you need to keep getting updated with the latest developments like notifications or rules. So as I said, 24 states have come out with the draft rules. So you have to go through that and keep yourself appraised about the rules and keep, the only way to to enhance the skill sets is to more read and then understand the and be on top of the latest developments and the notifications which are coming through.
All right. And the next thing is about mandatory holidays. So the question is, will Saturday and Sunday be considered as mandatory holiday as per the New Wage Act?
No, there is no such mandatory holiday. Code as of now says that for 6-day working, 1 day should be a holiday. It doesn't say it has to be a Sunday or a Saturday. So for any employee for a week, you have to give 1 day as a mandatory holiday is what the code says. That's all.
All right. So the next question is about VPF, Mr. Amaranath. So the question is VPF uh, impacted on the wages definition?
Sorry, what is that? VPF, Voluntary Provident Fund, is it?
Right, right. Yes.
Okay. VPF is a voluntary thing. So there is no impact on the definition of wages. So there is no impact on the definition of it. It is not a specified exclusion or anything. So it is basically a voluntary contribution by the employee. So it goes as a deduction in the payslip from the salary. That's it.
All right. So I think we have answered many questions,
Yeah,
Mr. Amaranath.
that's there.
And
Yes.
there's last one question for today's session. So, dear attendees, if any of your questions are not answered, could be of two reasons. One is mainly it could be a repetitive question or could be because of lack of time. But in any case, do not worry. You can always reach out to either Mr. Amarnath or Greater Shar on the mediums, which I'll be sharing with all of you soon. So, Mr. Amarnath, I'll just take up one last question for the day. So the question is more towards very generic question, I can say. So the question is, if leave encashment is given to managerial level employees, would there be any challenge if company continues to do that?
No, if it is given, if the leave encashment is given to the manager level, will there be any issues? No, no, absolutely no issues. See, the labor laws have to be understood with an intention that it is more employee friendly. See, for example, the Gratuity Act says that Gratuity Act is applicable only if you have 10 employees or more. So even if you have less than 10 employees and if you are giving gratuity, there is no such bar on that. So if you are providing more benefits than what is prescribed, you are always welcome. So the code says that for a worker, you give the leave encashment. But if you want to give even for the higher level employees who are supervisors or managers, definitely you are welcome to give the leave encashment benefit.
Sure, that answers the question. Thank you so much, Mr. Amarnath. So I think with this, we have reached almost end of the Q&A round. So thank you, dear attendees, for posting all your questions and hope we have done our best in answering your questions. And before I end this session, would like to share a few important references to all of you. So Mr. Amarnath, if you can just allow me to share my screen.
Yeah, please. Yeah.
Thank you so much. So, dear attendees, there's also something called Great Drive, a Great or Great HR's new initiative. Basically, it's a knowledge sharing platform. A lot of Q&A happens here. So, if any of your questions are unanswered, please feel free to post across your questions on our Great Right community, where you will have a lot of HR peers just like you who are looking for answers or who are looking for a lot more information on not just your new code of wages, but also anything and everything related to the HR industry. It could be just a compliant related question, or it could even be policy related question of your company. Anything and everything, you can seek your answers here. So the link for this Great Right community is already mentioned on the slide. If you can see in the bottom of the slide. So here it is. And this is completely free of cost sign up. So please feel free to visit the community and be a part of it. And not just that, we also have expert panel here, just like Mr. Amaranath, who will be answering your questions as and when you post it across there. All right, so please take a benefit out of this and let us know what do you think about it. All right, so on this note, I think it's now time to end our session. And before that, once again, I would like to thank all of you for making our session a grand success, and also Mr. Amarnath, thank you once again for sharing all your valuable insights with us. And I'm sure this has helped a lot to attendees. In fact, personally, me being employed, this has given me a lot of information. So thank you so much for that. And we'll be looking forward to see you. And also, dear attendees, I have observed few of you have asked for recorded session. It will be definitely shared with all of you soon once the session is done. And for any queries, you can always write back to us on the given mail ID, that is rakhi.gautam@greater.com. So on this note, I think we are good to wind up the session for today. Looking forward to see you again in the upcoming sessions. Till then, have a great time. Stay safe. Thank you.
Thank you. Thank you, Rashmi. Thank you all.